you shared this with the team. I'm looking at a chart comparing the concentration of S&P 500 market cap with earnings, and there's quite a disparity there. Can you describe the chart and tell us why you thought it was important to share this with the team?
So the graph is depicting the valuation of the S&P 500's top 10 holdings, right? The 10 largest companies by market cap. So we've had 2 companies now break that, which seemed impossible at $1.4 trillion threshold. So NVIDIA was the first company to ever go over that valuation. Then Microsoft joined it a few weeks later. So the top 10 companies in the S&P 500 by market cap are now 40% of the weighting of the entire index of 500 companies, right?
Usually in America, in our politics and in our economics, we like to keep things more divided and broken down and not so concentrated.
Right.
So I don't, tell me
in a
what
recent
this
show,
means.
we talked about the first time a company by itself went over 8% weighting, and that was NVIDIA when it broke that $4 trillion mark a couple of weeks ago. And we talked about that. It only happened twice in history before, and the federal government sued both those companies for decades. Actually, those lawsuits went on forever, and that was AT&T and IBM back in the day. Anyway, so the point being is when we get this concentrated, typically something breaks. And there's, whether it's a government trying to break up an Amazon and make it into multiple companies, or it's a recession hits and it hits these companies in particularly hard, you can see some significant retracements in the valuations of the market in general, because most people have some sort of passive investment fund in their 401ks, et cetera, that's just tracking the index. Well, 10 companies are really controlling the value of that index. 40% of the weighting is just 10 companies. So we want to pay attention to this. So the graph, the line that's below it, this is the important part, Chip. You see that light blue line. What's the percentage number you see there?
That's only 30%.
They're 30% of the earnings. So if we were, and earnings are what drive stock prices traditionally. So those weightings, if the earnings are 30%, then maybe the weighting should be 30%. Does that make sense?
Yeah, but it's 40%.
Right. So they are overvalued.
Okay.
We talked about Case Shiller Index earlier, and Robert Shiller I got to have a conversation with. This is what he's citing, is these companies, so their price is a little ahead. Now, it doesn't mean they can't catch up. Their earnings can catch up. These are the big companies that are obviously flourishing under AI and the boom. But the GDP this year, Chip, our GDP, which just came in the 3% GDP report we just got for the second quarter, right, which was above expectation, was nice. Over a third of that was just CapEx spending from these big behemoths in tech. Meta, Facebook, Google, Amazon, et cetera, all these companies, NVIDIA, all this CapEx spending to build out for AI, which is zero productivity today. So they're spending money, and that is contributing to GDP with zero productivity. Now, the hope is that this turns into next year into advanced productivity across all sectors in the economy. That's obviously what this administration is hoping on. But if there's a hiccup, if there's any kind of pause, we're delayed 18 months on that productivity coming through, to the workers, to what the economy produces, then our GDP could shrink and you could see valuations shrink drastically. All we're saying is proceed with caution. If you own any of these highly concentrated positions, just make sure you understand, are you taking the appropriate amount of risk in your portfolio? Because if one of these were to, say, get revalued, as we're recording this, we're about 2 weeks away from NVIDIA's next quarterly report. This has been, astronomical stock. Obviously, it's been an amazing company, an amazing run with the price. But what if they were to miss, right? What if they were to miss their stock? AMD, one of their biggest competitors, another chip maker, just reported earnings this week, and they did not really do well on their earnings. And when you dove into what's called their 10K filing the quarters, I was reading it, they pulled forward next quarter's receivables. They sold off. In other words, if I sold you chips and you're going to pay me later, I gave you 6 months to pay me. That's accounts receivable. I took that, what you owe me because you can't pay me yet, your company, and went over to this other company and said, hey, I'll sell you that note at a discount. And they took a discount, about 15%, to book the earnings this quarter so they could show a profit for the quarter. It's financial engineering. It happens all the time in publicly traded companies. But they would have lost money if you would have looked at it as a straight shot. So again, that's telling us, is the chip sales really there? Again, NVIDIA has set itself across in the pack. AMD's number 5, but I don't know what's going to come in these. Again, this is just the tale of proceed with caution.
Well, you made a historical reference. You said in 2000, at the time of the dot-com bubble, the peak was 27%. In other words, the top 10 owned 27%.
And if you remember AOL, right? And so that was the exact same thing. That was like the NVIDIA of today. And it was trading at 200 and sometimes earnings, right?
So this is a concentration among the top 10 that's about 50% higher than the dot-com bubble.
Yeah, and that can be scary.
Okay.
Again, we're
All
willing
right.
to pay, as
Yeesh.
time goes on and productivity increases in society, we're certainly willing to pay a higher multiple for companies. So historically speaking, the S&P trades at about 16, 17 times next year's earnings. Right now we're trading over 22 times. So that's a little high even for willing to pay higher. So again, it just means it's overpriced. It doesn't mean the price has to fall. We'll wait and see. Hey, if you're looking for more content like this, make sure you check out these videos and don't forget to like, subscribe, and ring the bell so you'll be notified when we publish more content that will help you retire smart. Thanks for watching.